Thank you everyone so much for joining us today. It's our second event as part of the Digital Asset Trading and Technology series. I'm really excited about today's panel. We're looking at a hugely important but maybe lesser discussed topic, institutional Bitcoin mining. We've got some of the biggest names in the mining industry with us today to talk about how mining fits into the digital asset ecosystem and how it's going to impact the industry moving forward. My name is Elsa Ostrov. I'm the Chief of Staff at CryptoCompare, a global leader in digital asset market data and indices. CryptoCompare provides retail, government, and institutional clients with a comprehensive granular overview of the market across trade, order book, historical, social, and blockchain data. We've partnered with BlockFills to put on this three-part series, which runs every other Thursday. Our next webinar discussing asset management will take place on the 6th of May. We're going to be announcing some great speakers for that panel soon, so please sign up if you haven't done so already. You'll hear from BlockFills in just a moment on our panel, but as our partner for this event and really an awesome team to work with, I just want to give them a quick shout out before we kick off. BlockFills is a global financial services, technology, and trading firm in the digital asset space. BlockFills was the first electronic off-exchange digital asset liquidity provider and prime brokerage operating using an ECN or electronic communication network model. Their technology platform performs order matching, execution, and routing for more than 500 institutions in 50 countries. In addition to BlockFills, we have some excellent panelists lined up from some of the biggest names in Bitcoin mining. Moderating today's discussion, I have the pleasure to introduce James Bennett. James Bennett is the CEO of the ByteTree Group, a Bitcoin data company who provide research and asset management services for Bitcoin investors. Their flagship product is the ByteTree Terminal, which is used by thousands of hobbyists and investors looking to generate alpha trading strategies for Bitcoin. ByteTree's asset management business currently runs the Bitcoin in General Fund and recently launched the world's first exclusively Bitcoin and gold index, which is available on Bloomberg. I'll leave James to introduce the rest of our panelists, but I do want to remind everyone this is a live discussion, so we're going to be taking questions throughout the session. Please feel free to write in using the Q&A function at the bottom of your screens. We'll try to keep this as interactive as we can throughout. So again, thank you so much for joining us today. I'll now turn things over to James to lead our discussion.
Brilliant. Thank you very much, Alyssa, and a warm welcome to everyone here today. We're going to be talking about the institutional mining landscape. Who is involved in institutional mining? How does it fit into the wider digital asset ecosystem? And why is this one of the most important and least discussed topics in crypto? Before we kick off, a little bit of housekeeping. The panel will last around 45 minutes and we will be taking questions from you, the audience. If you do have a question, pop it in the Q&A box at the bottom of the screen. Okay, so last bit from me before we dive into the panel is to have the panelists introduce themselves. So Ben, if you can kick us off, please.
Great, thanks, James. First off, just want to thank BlockFills, ByteTree, and CryptoCompare for putting the event together and having us all here. Pleasure to be here. My name's Ben Gagnon. I'm the Director of Mining Operations at Bitfarms. We are a publicly traded Bitcoin miner that's based in Quebec. We're currently operating about 1% of the Bitcoin network, and we've been publicly traded since 2018. We provide institutional and retail investors with an easy proxy to Bitcoin mining and Bitcoin.
Great. Thanks, Ben. Thanks to ByteTree. Thank you, James, for moderating the panel, and thank you to CryptoCompare and BlockFills for putting us all on. My name is Whit Gibbs. I'm the co-founder and CEO of Compass Mining. Compass Mining is dedicated to democratizing Bitcoin's hash rate, giving everyone the ability to mine Bitcoin profitably and strengthening the network overall. I also am the host of the Compass Mining podcast, which focuses on Bitcoin mining and Bitcoin mining news.
Thanks, gentlemen. Thanks, everyone, for joining. We appreciate everyone following along on this particular panel in our three-part series with CryptoCompare. Thanks to James for moderating, as always, and everyone for joining the panel. My name is Neil Van Huis. I'm one of the partners and director of trading here at BlockFills. part of my responsibilities is to lead the charge on our structured finance division for miners in North America. And so over the last 6 months, we've deployed approximately $100 million to institutional mining companies looking for scale throughout the world. Thanks for everyone joining, and pass it on to you, Elsa.
Thank you. Thank you, James. Thank you, all of you, and thanks for having me here. And I'm Elsa. I'm the marketing manager of MicroBT. MicroBT is the manufacturer of WhatsMiner, and we established in 2016. And in Shenzhen, China is our headquarters. And we are leading in chip design, and also we provide one of the most competitive mining rigs, WhatsMiner. And so far we have like 4 generations, and we have WhatsMiner M1, M10, M20 series, and the latest one is M30 series. Thank you.
A lot of good stuff. So thank you, everyone. Glad to be here today. Dave Perrill, CEO and co-founder of Compute North. I come from the data center managed services sector. I've been in the space for 25 years. Founded Compute North in 2017 when I was personally looking for a large-scale host that was credible and could provide our miners at low cost. Weren't able to find what we were looking for, and that was the advent of the company. So we provide digital infrastructure, to miners that are looking to scale. And we have 3 sites under management in North America with 200 development today. We've worked to really separate ourselves in 3 ways. Just first, being trustworthy and credible. 2, moving at the speed of crypto, and everyone in the panel knows what that means. And then 3 has really been taking an energy-centric approach. I know we'll talk about that more today in the panel, but being low cost, being green, and ultimately being a good citizen to the grid. All those kind of aspects are really coming up, first and foremost in mining today. So glad to be here.
What an absolutely outstanding lineup we have for you today. Okay, so if you could kick us off by, let's start with one of the kind of grounding questions, which is why should we care about Bitcoin mining, and perhaps who should care?
Everyone should care. I mean, when it comes to the nascent asset class, which is Bitcoin, and being that we're just over a decade old now as an asset class, we have to really focus on strengthening the network as it continues to grow. It's our belief at Compass that everyone should have a part of their portfolio exposed to Bitcoin mining. If you are holding Bitcoin in some capacity, you should also have an ASIC or 2 on the network. And as your position in Bitcoin grows, if you're a fund or a family office with 1 to 10 million exposed, you should have a growing percentage of exposure to the mining infrastructure as well. So it's just very important that everyone takes an active stance when it comes to mining Bitcoin, and really look at how they're contributing to the overall security of the network.
I think a lot of people get it, or are starting to get it, but there is this sort of nagging thought in their head, which is, I'm a small entity. How can I compete with these huge scale data farms? Is it even going to be profitable? So the question on my mind right now, Ben, is how much does it cost to mine a Bitcoin? And maybe at different ends of the spectrum, is it profitable for me to just have 1 rig?
I mean, right now, absolutely. The economics are so tremendous right now that it really doesn't matter what your underlying electricity price is or what your efficiency on your ASIC mining rig is. You are mining at a profit. It's very, very easy to do for anybody to get started. I mean, these ASICs are very plug and play. Anybody could figure out how to run one with a 3-minute YouTube tutorial and get set up, or use somebody else's services. At this point, yeah, it makes sense for pretty much anybody to mine. That's true right now. It may not be true in the future when things are more competitive. If we were in the bear market that we were in 2-3 years ago, it would be a completely different situation. And you would not be cost competitive running at 6 cents on super old equipment. But today, pretty much anything goes.
Okay, brilliant. So if we're looking at the mining ecosystem, as it were, there's a lot of different pieces that come into play, and actually all of you come from a slightly different approach, and coming together as the mining industry. So perhaps Neil, you could take us through what are the kind of core components to the a mining operation?
Sure. Well, depending on how big or how small you might be, I think today we're talking a little bit about institutional mining. So first and foremost, you've got to identify a site where you can deploy some sort of infrastructure. And with that infrastructure, you need something, in my opinion, that is certifiable, that is insurable to deploy at scale. Something like a Compute North operation. Or something like Bitfarms built from scratch, right, over long periods of time. You set that infrastructure up. The things that you're thinking about is what type of power are you getting access to? What is the cost of power? How many people and man hours do you need to run such an operation to maintain it? And are those people qualified to troubleshoot issues that might come up with miners or electricity, et cetera, in a safe and compliant manner? And then, you need great access to machines from Elsa and her team. Get those machines deployed in your operation. And as Ben said, it's I think if you look back to when people started to maybe look at Bitcoin for the first time, it was a little overwhelming. You're like, what's a Bitcoin? Do I have to buy one? Can I buy a small amount? You had to learn all those things. Today, I think in mining, it's not rocket science to figure out how to plug a miner in, but to do it at large scale, having a great operations team, I think, is critical to stand out. And being astute in the electricity markets and perhaps in the renewable power space can really separate you from the rest of the field today.
Yeah, you touch on such a poignant topic there, which is the type of energy and the amount of energy that the Bitcoin mining sector consumes. We can't hide away from it, but perhaps we can address, some of the issues that people have. So, one of the main concerns is, okay, the Bitcoin network consumes more electricity than, say, a country like Norway. Should we be concerned, or let's say, how can we ensure that, let's take it in two parts. One, why does it consume so much electricity? Does it need to? And two, if it's going to consume electricity, how can we do that in the most sustainable way, whether with renewables or maybe carbon offsets? Ben, I think you guys have 100% renewable mining operations, so perhaps you're in a good position to take us through that one.
Yeah. In Quebec, we're 100% powered by hydropower up here. So our 69 megawatts are 100% hydro. The energy problem or the energy debate has been going on very, very aggressively recently. I think a lot of context needs to be put into that. I did a piece just last week contextualizing the emissions relative to the rest of the globe. And while it may compare to individual countries, what we need to understand is that the emissions and the electricity consumptions by countries go up exponentially with their development, their GDP, and their wealth. So to be at 36th, 37th in the pack means you're actually, 0.3 or 0.1% in terms of the global emissions. And so it paints a really different picture. Is Bitcoin consuming a lot of electricity? Yes, but we live in a digital age, and computers are going to continuously consume even greater and greater amounts of electricity over time. That's not a bad thing. That's a good thing. That helps us advance society and make people better off, bring people out of poverty and everything else. The question really is how is that electricity generated and distributed throughout the system? And a lot of education needs to be done there in terms of the electricity grid and what that means, because for the vast majority of miners, we're not consuming electricity that we've somehow stealing from somebody else. When it's cold in Quebec, we turn off. It's not as if we're denying people's electricity to heat their homes, right? All we're doing is we're consuming the extra electricity that's being generated and not being consumed, right? And as miners, we're always going to go for the place with the cheapest electricity, and that's always going to be the place where supply exceeds demand. And that's that gap that we fit, is monetizing that gap, which was always a waste before.
Dave, you've been running data centers for decades. What's your take on, how to manage the energy needed to run these data centers?
Yeah, I think Ben's exactly right. I mean, we're certainly in a period of great transition in regards to what's going to happen on the source side. And I think the consumption side is the wrong end to really be focused on. To that point, I think the days of what I'd consider parasitic load, meaning you are a Bitcoin miner and you take as much energy for as long as possible and you're just going to compute regardless of what's happening in the rest of the grid, are the days that need to be past us. And I think that was the model, what I can, maybe 3 or 4 years ago, and it's significantly changing. Like Ben and our friends in Quebec, they have access to great renewable hydropower. That's simply not the case on a worldwide basis. However, the push to renewables, wind and solar, and even I think nuclear will start becoming a bigger part of the conversation. Is going to be much more distributed in nature. And as a result, I also think the compute is going to have to follow that, meaning it is going to have to follow the distributed nature of where the actual power is generated. And as we see that, I think, Bitcoin mining and what we consider and categorize tier 0 compute being at the forefront of this, of enabling new power sources, new power, build outs, and really helping them, monetize assets that otherwise wouldn't make sense to build. And I think there's going to be a huge transition over the next 3 to 5 years, particularly in the US. And I think it's going to be a global phenomenon that I think is good for everyone.
Brilliant. And Dave, actually to follow on that, in your data centers, I understand you do lots of different processing, lots of different jobs, artificial intelligence or mining or, other things. What does the future look like? I mean, in a world where so much compute resource is needed, is Bitcoin competing with that or crypto assets? Are they competing with that, or is it a different sort of load? Do they each have a different role to play?
Yeah, it's exactly a part of the conversation. Our thesis is that compute should be much more economical, much more distributed, and much less of, again, what we consider a parasitic mission critical load. Now, there's data centers that are tier 4 hyperscalers that need to run at 5, 6, 9 uptime. There's absolutely applications like that. If you're running a Zoom, if you're running your email applications, e-commerce, et cetera, there's a whole myriad of applications. And I think Bitcoin is really pushing the limits on this of things that can be done very economically, done at very high scale, and can be done in distributed nature. And we see, Bitcoin mining, Ethereum, any kind of proof of work consensus as the first of many verticals that's going to push out this industry.
Fantastic, thank you. Dave, so we're going to move on shortly to talk about access and how institutions access this mining industry. But before that, I'd like to talk to Elsa a little bit about the supply chain. Elsa's in a really unique position, one of the few companies that makes the ASICs and the machines that are able to run the Bitcoin network that we know and love. So Elsa, can you tell us a little bit about maybe the challenges that you face or that companies face in producing the type of technology that you do?
Yes, and I think most miners who already know that, because I have heard they have complained about why they couldn't get mining rigs currently, because yes, and it's true that this year we really has met some problems about the supply chain, about the wafer, that means about the chips. So actually, it's also a big challenge. It's not only for our industry. I think it's for worldwide, because this chips, the wafer, they're only like 2 biggest foundries in the worldwide, TSMC, and the other is a Samsung foundry. So as you know that if every electronics devices and also about AI, and they're all related chips. It's not only about ASIC mining rigs, so that there's a huge demand versus like the limited supply chain. So that's why that's why it's a problem for I mean, for all the industry. And as for the ASIC mining rigs, we are still like a small industry. I mean, compared with the electronics devices. So that's why, and it's kind of it's one of the problem. And also, but I think that we are working on it, and we are trying to fix it. Yeah.
Okay, so there's actually a question from the audience, which I think is a great time to drop it in, which is about, whether MicroBT or companies in your situation might plan to move part of their manufacturing into the US to better serve North America and out of China. Do you think that that's something that is happening?
Actually, we are. Yeah, we know that it's about the section things, and because the U.S. to China, so that's why we have the tariff about mining rate. So that's we have been working on this to build the factories and out of China, and we already have one in Southeast Asia, and I think that you guys already heard the news, and also we are working on this for the overseas customers, especially the customers in North America, in US especially, because we would like to solve this problem. Yeah.
And when you're talking about the news, I think you're too humble to say that you have contracts with Blockstream and with digital currency groups, Foundry, in the US, two huge contracts for you guys. So, okay, let's shift gear and talk a little bit about how institutions, perhaps on this in part of this audience, can get exposure to the mining space. So, Bitfarms, we've already heard from Ben, are a listed company. Neil, let's say you want sort of less direct exposure to the mining industry or to Hashrate. What sort of options are there out there?
So would you be asking primarily about how to get access to Bitcoin mining exposure without exposure directly to one miner on the public listings?
Yes, that sounds exactly that.
Yeah, I mean, there was a question that was brought up about BitUda's hash rate swap. I think there's interesting ways for institutions to get involved. Obviously, we run a structured financing division that deploys a great deal of flexible capital to institutional miners for advancing their operations and specifically their machines. So it's no there's no privacy here. I mean, we've done a lot of business with MicroBT and Bitfarms. We've done business with some customers at Compute North, and we feel that there's a certain amount of companies today that are doing really what it takes to advance hash rate in North America. And I think everyone on this call are a part of that. You've got Compass giving access to people that have never had access to mining before, and giving them a low barrier to entry. So I think today there's a lot of options. You can call Compass up and you can get a couple machines online. You could obviously invest in the public markets. If you're an institution, you can call a company like us and syndicate to short-term debt finance to buying machines that are collateralized. The debt is collateralized by that. And if anything happens, you own the machines and you have access to turning on your own operation, either wherever you'd like or through a third party like Compute North. So I think this transparency that we brought into the market and some other players followed us along, that's great. And I think we'll continue to see that evolve into something that's a streaming listed product that gives you access to hash rate of some sort. So we're looking forward to that streaming transparent product, hopefully in the next 12 to 15 months or sooner.
Yeah, that does sound like something you would start to see appear on the likes of Binance or FTX exchange in the coming months. That is not an endorsement, by the way. So when we talk about hash rate, again, it's such an important part of the network. Whit, could you maybe tell us a little bit about why democratizing hash rate is important, and how we can actually maintain some kind of visibility over who is controlling the hash rate?
Sure. So the visibility question is one that we'll get to towards the end of this comment that I'm about to make. But when it comes to the importance of hash rate and democratizing hash rate, I do believe that more and more it's becoming a matter of national security, right? If we're really looking at Bitcoin as the future, then it's very important that countries are focused on getting as much hash rate as possible within their borders and encouraging miners to establish themselves firmly within a certain nation. We're seeing incentives state to state in the U.S. for regions that are trying to attract Bitcoin miners, and we're also seeing this geographically with different countries, whether it's Venezuela or Argentina or Paraguay, who are providing great incentives for people to come and mine there, or countries like Norway, who are becoming more and more amenable to Bitcoin mining. It's something that we're seeing those countries that are on the front foot be focused on hash rate. As individuals, it's just important that we take control over that, right? If you have a fund who's managing assets, right, they look at their assets under management. With Bitcoin miners, big and small, we should be looking at our hash rate under management. How much hash rate do you directly impact? Do you have control over it? Because for every one machine that you put on the network, that is some control and some added security that you provide to the Bitcoin ecosystem. And it's critically imperative. And as Neil was discussing, with these hash rate products that are going to be coming in the next 12 to 18 months, everyone who is contributing hash rate to the network will likely have the ability to participate in these, which is just yet another way that they can add to their Bitcoin stack. So it's imperative now to get started and to keep growing, just as the institutions would, right? Everyone has the ability to operate their own small business in a sense by starting with one miner and then growing from there.
Brilliant. When you think about your portfolio and you put your allocation to Bitcoin, if you're Saylor, it's 100%. If you're a more conservative portfolio manager, you might look at 1 or 2%, maybe 5%. And within that, you're saying don't just hold the underlying asset, own a bit of hash rate, maybe own a mining company, maybe own some of the underlying. And that's all contributing to the ecosystem as well. There's a lot of correlation between these different products and the Bitcoin price, right?
Absolutely. Yeah. I mean, if you're going to be a well-rounded Bitcoiner, you should be stacking sats every way that you can, whether it's mining, whether it's buying and getting Bitcoin back on purchases, whether it's exposure to Bitcoin mining companies or public companies that are helping you to gain exposure to Bitcoin, or whether it's just buying and holding Bitcoin itself. We need to be taking an active role in participating in Bitcoin in every possible way that we can.
I couldn't agree more, Whit. So what the audience don't know is that Elsa is actually on a business trip at the moment in the mining capital of the world. Maybe it would be a good time to talk a little bit about how much of the Bitcoin network is mined from that province, which you will pronounce better than I will, and how we sort of get any visibility on the hash rate globally.
Yeah, I think maybe so far still the more hash rate, the main hash rate is still maybe in China. Yeah, especially in Sichuan, Chengdu, Sichuan province, because the West isn't the hydropower and a very cheap electricity fee. But as the last 2 years and as our company, and we saw like more and more overseas customers, and they are out of China, and they are considering they are start purchasing more machines, place more orders. And especially like since the 2019, and we see that we have more and more customers overseas, and we saw that maybe in the near future, maybe the hash rate has already been decentralized, maybe not only in China. I think also they're full of potential in North America, also like in the in the Russian and related, like Kazakhstan's, like other related countries, and they are very full of potential about begin to growing more hash rate. Yeah.
That is very positive to hear. Thank you for that, Elsa. Okay, so now driven by a thirst from the audience for these types of questions, we are, Dave, you operate a data center, you've got lots of different things going on. Do you mine more than just Bitcoin, or, and if you do, maybe you can talk a little bit about that.
Yeah, I mean, we have customers that are all different types of proof of work consensus networks. So think Ethereum, think Zcash, think Monero. There's a couple other esocentric ones that I can't even tell you all the details behind. To reiterate, kind of our business model is we're there to help customers scale and build out. At the end of the day, there's so many, trusted partners and other customers, and even on this panel that help them with the other elements of their company and their business. We're really focused on that infrastructure side, doing it at speed, doing it at scale, and doing it at low cost.
Yeah, and Dave, maybe, I think there's some future developments. I don't know if you can talk about them or not at Compute North that maybe put you in a category of your own going forward in North America coming up. I think, there's, for as much as we all talk about a race for ASICs and a race for hash rate, there's also a race for power. And people don't get that. You could have money, you could have machines, and you could find out quickly that there's nowhere to put them. Maybe, Dave, you could talk a little bit about, a little shameless plug for Compute North. Maybe you could talk a little bit about, the future for you guys if you'd like, because there's probably plenty of people, on this this panel and that are following along that want to hear about what's available for the future for people mining in North America.
Yeah, Neil, no, appreciate that. I know Ben can relate as well. The energy sector does not move at the speed and at the pace that we do in crypto. And I think merging those worlds together to do it at scale takes some pretty unique ideas, pretty unique experience, and pretty unique network to do so and do so well. One thing about the US market, for example, it's just very, very fragmented. Every different ISO is different. Every different state has its own rules and regulations, sometimes down to a county or even city level. And you need to be able to navigate that. And you got to have credibility. I mean, these guys think in terms of, 30 to 40 to 50-year assets, and we're just in a different space and sector. So to Neil's point, there's some things that we have coming around that we're going to be announcing in short order about some of our new site developments. But I'll get back to some of the earlier things that I said. Large scale, much more of an ESG profile. People are really concerned about renewable and green, and there's not just you're green or you're not. There's a lot of shades within how that works. And I think being much more, as Ben pointed out, for example, in Quebec, when it's cold, you should absolutely be shut down for health and human services at the appropriate time. Texas is the opposite scenario, even though we did have a cold event this year, but a lot of times there, during the hot periods is when the grid gets really strained. There's a lot of challenges in terms of capacity, and our types of load and our types of customers are certainly willing to curtail and shut down and those types of opportunities to be not just a good operator, but be economically incentivized to do so. Because if you think about it, I mean, those are the times when they need that grid power for other purposes. And if we can align incentives, if we can align us, our clients, and then the energy providers to be on the same page, it's really a win-win-win scenario. And that's what we've been driving to at Compute North.
That's awesome. James, maybe we could, that's an awesome spot there's a question that I noticed that was really interesting, and we were talking about it before the panel started about the hash rate drop in China. Maybe Whit, Ben, Elsa can kind of jump in and talk a little bit about what we just seen recently in China with a hash rate drop and some power outages and things that we've all heard, but maybe everybody could dive in. Whit, why don't you start?
Yeah, so there was a request outage at a coal plant in Xinjiang last week, and that led to a significant drop in hash rate between 20 and 30%. And it led to a lot of speculation, right? How much of the network is being powered by coal, and what does this mean for the overall network? And now, we're 5-6 days later, we're seeing some of this hash rate start to come back online. But as we know, the difficulty adjusts every 2 weeks. So we went from what was one of the largest difficulty increases at the last epoch, the end of the last epoch, to now coming into a situation where right now it's stated that we could see between a 15 and 23% drop in difficulty, which would of course mean a tremendous amount of profitability continuing for the existing miners. But it's still somewhat difficult to gather facts from sitting outside of China. What I'd love to hear is Elsa's stance or opinion on what's going on, since she's boots on the ground in the area.
I think that might be the mining machines moving from the core power to the hydropower, because the wet season is coming soon. It's already maybe next month. And so I guess lots of mining rigs from like Xinjiang, Inner Mongolia, and they will move to the hydropower place like Sichuan and also Yunnan province to have the cheaper electricity fee. Yeah, I guess it's temporary thing. Yeah, the hash rate drop. That's my own opinion. Yeah.
I think there's two big things that we can learn from the hash rate drop. The first is that, although people panicked, nothing happened with Bitcoin, and nobody was denied service on the network, right? Bitcoin continued to function just as it always continued to function, just as it's always been designed to function. And, this is a really unique property of Bitcoin, that because of its decentralized nature, even with a 20, 30, 40% drop, service still remains at 100% throughput. Blocks are slightly slower, sure, but not a single person is denied. There's not a single other platform in the world where you could make that same claim. And, this is what we're building here with Bitcoin. It's a really big idea, this new financial system that's completely redundant, completely reliable, completely transparent, and, completely voluntary, driven through these economic incentives. If there's a second point to be learned about this, it's that the decentralization, is a really important thing. And to have, 30, 40% of your network in one small part of the world might not be the best idea. And this is part of what's going on in the trend with the redistribution of hash rate around the world. We see Europe and North America really gaining in terms of market share. We're seeing smaller areas of the world, even especially the Middle East and Africa, which have historically represented, nil, are now growing at rapid rates. And we're not going to see these kind of problems in the future because it is going to be so spread out. There's not going to be a way to stop people from mining when the economic incentives are clear and completely open.
On that point, Ben, what could be the future of mining in countries like India, Africa, and the Middle East?
Well, countries like India and Africa right now have significant problems which prevent them from being able to mine. It goes back to that supply-demand problem that I talked about before. India has rolling blackouts in many cities where you're only allowed power this many days of the week. It's completely impossible for us to get good economics on power in a country that can already meet its own basic needs, right? So the real advantages are going to come in areas that already have that infrastructure developed and it hasn't been utilized in a long time. That's why the West is seeing such a resurgence. We outsourced all this manufacturing capacity, and all this capacity is still good. All this infrastructure is still valid. It still has utility and value, and that's why we're seeing such a rush. With regards to India and Africa, the only way that Bitcoin mining really drives those countries forward is if it provides an even greater economic incentive to actually develop their electricity systems and distribution networks to the point where they can provide, a stable electric grid to their population at a reasonable price. And Bitcoin is the most valuable market for selling your electricity or your energy. It doesn't matter if it's oil, gas, hydro, geothermal. This is the most valuable market in the world for your electricity. And when electric producers and utilities realize that, a small percentage inclusion in a project can have drastic reductions in their ROI. And if you can drastically reduce an ROI on, a new power plant in Nigeria from 25 years to 15 years or 10 years, you drastically reduce the risk, you drastically increase, the incentive to invest in those areas.
Just to
Ben,
jump
if
in
I
on
can
this,
add to that.
James. Oh, go ahead, Dave.
I was just going to say, if I can add to that, so my co-founder has 25 years in the energy sector, particularly with renewables and build outs, and he actually has assets in India. And so there's been some interesting stories about exactly that. I think the one thing that I think is sometimes overlooked is that because Bitcoin mining and the sector is also relatively mobile and it can move. And what I mean by is in a couple year period, I mean, also just talking about how they get moved, annually or twice a year in China. Being able to do that can also enable new construction on projects that otherwise wouldn't be viable due to interconnects. One of the biggest challenges you see a lot of times is the time frame to get these into the grid and get the interconnects and some of the transmission ready to take on this additional load. Now, if you can enable that ahead of time, have a viable project that's ready to go, have load there, and then knowing the interconnect is going to come in 2 or 3 years, it really changes the economics from a development standpoint. And we see enabling a lot more renewables, particularly wind and solar.
And to the emerging markets that are coming into Bitcoin mining, with us at Compass, we've noticed a significant spike in inquiries from the Middle East and North Africa specifically. And it seems to have all been over the last month, right? As an American company, we're limited in who we can work with, but we are noticing that there are a ton of inbound leads, questions coming from Dubai, Iran, Libya, other parts of North Africa, where they are now looking more than ever to get into Bitcoin mining. And it's Bitcoin mining specifically. And we're seeing inquiries for deployments anywhere from, on the smaller side of megawatt up to 200 megawatts. And it's just clear that people are seeing this now as incredibly viable, as everyone has spoken to. It's very profitable to mine right now. But we'll see how this all plays out. I'm sure that more countries in more remote regions with access to power, because it does exist in a lot of places that we just don't assume, there will be more of these countries looking to get exposure to Bitcoin mining.
I just follow up on this industrial point with one last thing. If you look around at the electrical infrastructure that's built in America, it was almost all built by mining companies. It's real groups like Rio Tinto who've built almost all the hydroelectric dams in North America, because they needed it for their own production. And this is what we're going to enable again with this new wave of mining, a whole new wave of new infrastructure creation and new infrastructure investment. This is a very, very powerful thing. And the increase in Bitcoin's value and the increase in Bitcoin's electricity consumption are primary drivers of this. Those are very positive things for the economy and local populations as a whole, which is not something that we're seeing driven by any other industry in the world right now.
So just before we go on to talk a bit about the different technology of these Bitcoin mining rigs, it sounds like this is one of the best kept secrets in the electricity market. So how long is it, why are people now coming to the realization that they should get involved with Bitcoin mining? And are states, or countries, governments starting to look at setting up their own mining operations as part of their strategic geopolitical strategy?
I'll jump in with some thoughts on this. So at the end of the day, businesses are in existence to make money, right? So we're coming out of a time when a lot of these power producers have really struggled to sell their power. We have a period where people have not been going into offices, factories have been operating at less than full capacity. So there needs to be somewhere for this power to go that's being produced. And Bitcoin mining is a natural partner for these factories or big power consumers who are no longer using it for what they had originally intended, and still able to turn a profit from it. And then you look at the oil field deployments that are happening with companies like Upstream Data and Crusoe and Great American Mining, right? These are natural partners for oil producers who are going to continue to drill for oil, but the byproduct of that is they have this natural gas that they have to flare in order to keep drilling. So it makes for a natural partner. And obviously, rather than the expense and the really the havoc that it wreaks on the environment to flare this gas. If they're able to partner with Bitcoin miners who can drop one of these mobile rigs on and mine Bitcoin, then it's good for the environment, better for the environment than flaring certainly, and profitable. So, at the end of the day, I think capitalism is just doing its thing.
Yeah. I think a lot of this has to do with the inherent risks in an emerging market. For the most part, Bitcoin has been done by scrappy entrepreneurs, who have, been doing things kind of here and there, just, whatever it takes to make it work. And you really don't have the kind of protections in there that an institution, needs for them to even look at this as an investment. And that's something that I think everybody on this call realizes and, is working very diligently to address the reputational issues and address the inherent risks in Bitcoin. But what we've seen, especially over the last couple of years, is a mass securitization of Bitcoin and a mass, institution of a series of guardrails and trust points and verification points and everything else. And I think for the first time, institutional investors have finally actually had the ability to invest in Bitcoin. It may have had desire in the past, but they just didn't have the tools. And if you go on bitcointreasuries.com, you see all the Bitcoin that's securitized already in these American institutions. You see all the ETFs that are launching. You see all the groups that are working to get listed on NASDAQ this year. This is not something that's going away. It's a trend that's going to continue. And we'll see companies that have never done Bitcoin mining start to transition out of their core business and move over, because we do have these institutional tools now. I think it's very telling when a group like Tesla takes $1.5 billion away from increasing their production or addressing, any of their recent issues or R&D, and instead puts in Bitcoin. As a publicly traded company, you have to do what's in the best interest of your shareholders. And if you can't justify that putting your $1.5 billion into Bitcoin is not going to give you a better return than investing in your business, that's a problem. And so obviously Tesla's figured something out, and Michael Saylor's figured something out, and it's taken a long time to get here with the trust and the education, but this is something that's picking up a lot of momentum now.
Only thing I'd add to that, I think Ben brings up some great points. I think that some of these, country states are starting to look at this as critical infrastructure. And I'll age myself a bit, but I cut my teeth in the 90s. My first business was an internet service provider, and what made the internet so great was the standardized layers and the ability to grow and expand upon that. And I look at Bitcoin really as layer 8 on the OSI model, meaning that it's a standard. And one thing I know about technology standards is once they're in place, they continue to move forward and they just simply don't move. I still know clients that print paychecks on ES400s that were built in the 80s. It's just some of those things just stick. And no, there's not a single public blockchain with the size, the scale, and obviously over 12 years of no security issues and been able, just what we talked about earlier, you take off 30% of the hash rate and continue to move forward. So I think they see obviously not just the economic interest, but just a need to be in the future of where things are going. And they want to be a part of that.
We've talked quite a lot about Bitcoin specifically. Obvious reason why, as a 1 trillion plus market cap digital asset. When Ethereum, Ether that's quite close behind Bitcoin, is moving to proof of stake, how might that affect the mining operation? Personally, I don't think Bitcoin will ever move to proof of stake. It's a completely different offering. Do you guys see yourselves diversifying into proof of stake? Is it a similar kind of skill set?
Yeah, I think there's already a lot of discussion around this. So I'm really interested in everyone's viewpoint on this. There's so much money being pumped into DeFi and separate protocols that support a proof of stake model. But I personally think that if we're going to be involved in the decentralized world, that just changing from one model to another maybe isn't a comprehensive solution to this specific asset class or this sector. And so I tend to think, and maybe I'll be wrong, we'll find out, right, pretty soon. But I tend to think that a proof of work and a proof of stake model can run hand in hand, and can support the likes of anyone that wants to participate in the decentralized sector, especially as it regards to GPUs and ether mining right now. I think there's a lot of people looking at mining ether is a totally different mining solution than mining Bitcoin. The usage of and power density is totally different than mining Bitcoin. There's also a lot of equipment out there from very big leading manufacturers that have multiple applications that are just not totally tailored to mining a crypto token, right? And I think the future of blockchain is that, right? It's what are the other use cases in blockchain from the mining industry's perspective? And so I think it would be in best interest of this space to run a side-by-side proof of work, proof of stake in a market like Ethereum. But we'll see. I don't know if anyone else has a better argument against that. That's just my thoughts.
I'll add to what you said. I mean, one of the things I love about this sector and the space is all the ideas. The innovation is just second to none. I mean, it's such a great community. People are always trying new ways. Now, the last thing the last paper I saw, I think there was 27 different proof or consensus algorithms that were out there. I mean, some of them were just mind blowing in the ways people were looking at it. But to my point earlier about a standard, James, you touched on this. Bitcoin's not changing. It's not going anywhere. It's the standard. It's the 9,000 pound gorilla. It's going to continue to scale and it's going to stay proof of work. It's the only one that's proven. It's got the timeline. It's got the time frame. I think it's fantastic that the other sectors are looking at it. To Ethereum specifically, I've been hearing this since 2017 that it's going to convert. And one thing I know about software is it takes 3 times as long, maybe 5 times, costs 10 times as much. And that's always been the standard, right? So I think you apply that. But I think it's great that they're trying new things. But when you take a look at kind of the economics, you start looking at some of the control points of decentralization, I do think proof of stake has some inherent flaws. But like anything, it only gets proven out when it actually gets put at scale and it gets deployed out. So I'm excited to see what some of the learnings are from that. And I always, love to see better and more improved ways to do what we do on these large scale networks.
I'm really with Dave on this one. The economic incentives, I think, between POS and POW are very, very different. I think POS is a very interesting idea and, great for people to experiment with other, different chains and platforms and everything else, but it's not suitable for Bitcoin. And it's addressing problems which are not problems, which is my biggest problem with it. The whole argument for POS is that we're consuming too much electricity as an industry, and I disagree. So there's a fundamental issue there with the reasoning for it from my side. I do think it has a place in this market, and obviously the market is rewarding that with a market cap. And by all means, this is a completely libertarian free market deal. We're not stopping anybody from doing, their proof of algorithm, but long term, I think it's very clear that POW is going to win out, for the specific reasons it was designed.
Excellent. Thanks to the whole panel. So we've got about 5 minutes left. I'm going to answer a couple more of the audience questions that are here. So one for Elsa. We've got a question about how long does it take in transportation for miners to switch from coal power sites to hydropower in China? So maybe how many days or weeks are lost in that switching process?
Okay, I think it depends on like how many units. I think currently it's like maybe over thousands of mining machines. They move from like Xinjiang to Sichuan. I think it's about maybe within a week. I think, yeah. I think it's from the put on the shelf. Yeah.
That must be a huge operation.
Yeah.
Brilliant, thank you. So on the subject of mining rigs and technology, maybe we can talk a little bit about the sort of innovation that happens in mining rigs, current models versus future generations. Neil, have you got any thoughts on that?
Well, I think there was a lot of feedback when Bitmain came out with an S19 and an S19 Pro about like the price that was being paid at a premium level for an S19 Pro in relation to call it the flagship S19 or M30S unit that was kind of out there in this 88 to 90 terahash range. And so I think there was a lot of feedback about the premiums that were being paid for that. And I think Bitmain maybe adjusted their strategy accordingly. But we've seen MicroBT, well, we've spoken to many of their team members about their viewpoint. Maybe Elsa, you could talk a little bit about what you think about the current models that are on offer from someone like your company, and maybe the viewpoint of any future technology and how fast it could be around and at what scale.
Yeah, thank you. That's a good question because, now we heard that they're like TSMC, they have like 5 nanometers, even 3 nanometers. But for the mining rigs, the improvement from this part, I think the benefits from the advanced technologies is becoming less and less. I mean, compared with 2 or 3 years ago. Because at that time, when, like for example, when WhatsMiner, we launched the first generation, like it's WhatsMiner M3 at that time, and the power ratio is like 180 watt per terahash, and then then we became to the 65, and then the third generation is about 48, and now the current generation is about like the 30 plus. So you see that it's about from the 16 nanometers to 8 nanometers, and we have a very big improvement. But from the 8 to 7, 7 to 5, maybe the benefit from it's not, maybe it's for sure that, because I also like confirm with Dr. Yang, and the benefit from this advanced technologies is becoming less. So and also like the mining, which means that if you have a efficient mining rigs, and you might have to can run like at least 3 to 5 years. Like for example, like I think now the efficient, like the power ratios, which like is 30 plus watts per terahash, maybe can run like at least 3 to 5 years. It's a long-term thing. And also even about the advanced technology, and we need time to prove the stability. And also it's all, there's a 2 factors affect the manufacturing, and it's one is the supply chain, and the other one is also about the yield rate, so which matters about the cost of the mining rigs. So all in all, that I mean that the high technologies need time to prove that the yield rate, and also even the high advanced technologies also have the very limited supply chain, because we have to compete with compete with other like big players like Apple, like Gagnon, yeah, that's so on.
Look, guys, we've covered an incredibly large amount of ground, and it still feels like we're just scratching the surface. Unfortunately, we are coming up on the hour now, and I think the best way to leave this is for each of you to let people know where they can find you if they have more questions. I know that you guys would be very glad to answer them. So maybe in the same order we kicked off, you can just tell people how they can get in touch.
Sure. Well, I recommend anyone who's interested in us to follow our Twitter and our social, sign up for our newsletter, and personally, I can be reached at #override on Twitter.
For Compass Mining, anyone who'd like to get started with mining, you can visit us at compassmining.io. We'll help you purchase 1 ASIC to 100 ASICs and get you set up at a good facility around the world. If you want to reach me directly, I can be reached on Twitter at BitcoinBroski. Feel free to DM me, and I will answer as soon as I possibly can. Thanks again for having us on, guys.
Yeah, thanks everyone. Feel free to contact BlockFills via our website, on LinkedIn. You can look me up. You can also find me on Telegram at BlockFillsNeil, and we look forward to hearing from everyone.
Elsa, where can people find you and get in touch?
Okay, as for me, I think I'm pretty active in our official Telegram group, and it's called WhatsMiner Community. And also, I would like to encourage all of you to visit our official website. We only have like two websites. One is WhatsMiner.com, and the other is microbt.com. And others, they are maybe they are scans. So just be careful. Yeah. Because we may have some problems about facing the fake website. So be sure that to make sure that you visit the right website. Yeah.
For myself, our website is very up to date. A lot of contact availability at computenorth.com. Personally, I can be reached on Telegram at Dave Perrill. LinkedIn is also good. I no longer respond to MySpace requests, so that has gone by the way of the dodo bird. So just heads up. But thank you again for having us today. It was a lot of fun.
Yeah, guys, finally, I'm James from ByteTree, ByteTree.com. You can find me at James on the Chain on Twitter. I've really enjoyed this panel. I hope you have too. Be sure to reach out to our panelists, and we'll see you next time.